Rate cut cycle. After a 6-month pause, the Reserve Bank of India has slashed key lending rates by 25 basis points. The policy, though on expected lines, did have some surprises in store as well. Here are the details.
RBI Governor Raghuram Rajan cut the policy rate to 6.5%, taking note of falling retail inflation and the government's commitment to fiscal discipline. The first monetary policy of the new fiscal announced a cut of 25 basis points in the repo rate, no change in the cash reserve ratio. But in a surprise move, the RBI also raised the reverse repo, that's the rate lenders charge to the central bank, by 25 basis points to 6%, while taking measures to ensure more availability of cash in the banking system.
After reviewing the economic outlook and prospects, the Reserve Bank of India cut the policy rate by a further 25 basis points. This means we have cut interest rates by a total of 150 basis points since the beginning of the accommodative cycle. Our attention in recent months has turned to seeing that this large quantum of rate cuts is passed through into borrowing rates.
The RBI forecasts the economy to grow at 7.6% in FY17. The central bank has maintained its FY17 CPI inflation target at 5%.
The monetary policy stance remains accommodative. Going forward, we will be looking for further monetary room in signs of good monsoon, further readings of low headline inflation, indications of softening in core inflation, and further evidence of transmission of rate cuts.
The RBI had cut its repo rate by 125 basis points last year. Banks, though, complaining of tight cash conditions, have lowered only their lending rates by around 60 basis points, preventing the RBI's rate cuts from feeding through to the broader economy. More important at this juncture is to ensure that the current and past policy rate cuts transmit to lending rates to benefit the common man. Bureau Report, DD News.
And joining us now from Mumbai on the RBI monetary policy repo rate cut is Shishir. Shishir, well, key lending rates have been slashed by 25 basis points. And even as the RBI governor announced this, among other highlights where he talked about softening inflation and a further reduction in rates as the days go by. What would you say are the implications of the announcements that were made today?
Well, absolutely, Rukma. Let me tell you that today's monetary stance is not just about reducing the repo rate by 25 basis points, which was market expecting, and according to expectation, RBI did cut the rate. Expecting a 50 basis point cut. Now here in this monetary policy, instead of cutting 50 basis point, what RBI has does that they've actually cut the 25 basis point repo rate, and what the room they have given is in terms of liquidity condition. Let me tell you that banking was actually in a stress, and they were telling that the liquidity condition is very tight, and that's the reason they were not able to transmit the rate cut which has done RBI in the past year to the consumers, and that's what the RBI's main concerns. Now, keeping this in mind, what RBI has strategically done is that RBI has reduced the repo rate by 25 basis point, increased the reverse repo rate by 25 basis point, and that's the reason somewhere here now the bankers will get some room and they will get the liquidity also in their hand. So this is one of the important stance taken by the RBI, because let me tell you that since last year, if you see that around 125 basis point rate cut RBI has done. But in terms of rate transmission from the bankers to the common consumers is concerned, is not even half percentage of that overall, if you look at that. And that's the reason that was a major concern from the RBI side also. Now here, RBI has taken this stance and definitely will improve the banking conditions, the liquidity condition in the market, which will definitely transmit that, hopefully going forward. And at the same time, RBI has also given signal that if the monsoon is favorable and the other conditions, looking at the core data that numbers looking forward, if that is also in favor, then going forward, RBI may reduce the repo rate also. So it's also one of kind of room and signaling that RBI wants to give to the bankers that at this point in time, the conditions are quite favorable. We have given you the cushion also which is required for the banking sector to lend money into the market. The liquidity condition is also loosened. So now it's a stand that the bankers should take a stand and go ahead and give some relief to the common people. So that is the main question, that when does the common consumers will get that? That is in the hands of the bankers now. Yes, Rukma.
Right, it's in the hands of the bankers now. So what you're basically saying that the RBI, even though it has come as a surprise, this 25 basis point mark, it has continued with its earlier monetary policy announcement, in which it has continuously been advising banks to extend the benefits of its repo rate and other rate cuts to the consumers.
Well, absolutely. That was a major reason here. If you look at some of the banker statement before the monetary stance, they have categorically said that definitely though the conditions looking quite favorable, even in the budget also, if you look at the maximum thrust is given on the development, and development is not possible until unless your interest rates comes down, and that is what the bankers and even the industry players are looking forward now. Now here, the RBI has not just triggered off as far as the interest rate is concerned, but also given cushion to the bankers to have some extra liquidity in their hands also, so that they get lend in the market. So that will give boost to the ultimately the overall development of the country, and that's the reason most of the companies will now ask for the loan for the banks, because the banks will definitely is assuming that will reduce the rate going forward. So overall, if you look at though the monetary condition is at this point in time is quite very sleek at this moment we are looking here, but going forward this will definitely give some room to the bankers, also the industry, so that more and more credit offtake that we can see in the market that will flow off.
So, Shishir, have there been any reactions, very quickly, have there been any reactions from the corporate world to this monetary policy announcement today?
Well, this is assuming as absolutely good news for the banking sectors and the corporate sectors also. As I rightly told you that the banking sector is also expecting that, even the market is also expecting there will be a rate cut. But how much rate cut, that was a major question. Now here RBI has given in principle, some of the demands have been in principle approved by giving 25 basis point rate cut, and the other things which expecting, RBI has given that in terms of liquidity conditions also favored banks also. So if you look at the entire situation at this point in time, it's a win-win situation for the market, also for the banking situation also.
Right.
It depends on how market react on it now.
Right. Thank you very much, Shishir. Well, that's all we have time for, and thank you so much for joining us with those details. Well, the government